Welcome to our video on the future of banking. In this video, we will explore the latest predictions and trends that are shaping the banking industry. From the rise of digital banking to the impacts of artificial intelligence, we will examine the key factors that are transforming the way we bank. Over the past few years, the banking industry has undergone a significant transformation. With the advent of new technologies and changing consumer preferences, banks are now facing a new set of challenges and opportunities. In this segment, we will provide an overview of the key trends that are shaping the future of banking. The first trend that we will explore is the rise of digital banking. In recent years, digital banking has become increasingly popular among consumers. With the convenience of online and mobile banking, customers can now access their accounts and perform transactions from anywhere at any time. The second trend that we will examine is the impact of artificial intelligence. With the help of AI, banks can now analyze vast amounts of data to gain insights into customer behavior and preferences. This allows them to offer personalized services and products that meet the unique needs of each customer. The third trend that we will discuss is the growing importance of cybersecurity. As more and more transactions are conducted online, banks are facing an increasing threat from cybercriminals. To protect their customers' data and prevent fraud, banks are investing heavily in cybersecurity measures. In the next segment, we will explore each of these trends in more detail and examine how they are shaping the future of banking. Join us in the next segment as we delve deeper into the rise of digital banking, the impact of artificial intelligence, and the growing importance of cybersecurity. In this segment, we will explore the first trend that is shaping the future of banking, the rise of digital banking. Over the past few years, digital banking has become increasingly popular among consumers. With the convenience of online and mobile banking, customers can now access their accounts and perform transactions from anywhere at any time. One of the key drivers of the rise of digital banking is the increasing use of smartphones and other mobile devices. According to a recent survey, more than 70% of consumers now use mobile banking apps to manage their finances. This trend is expected to continue, with mobile banking projected to grow at a compound annual rate of 12.2% between 2020 and 2027. Another factor driving the growth of digital banking is the increasing demand for personalized services. With the help of digital technologies, banks can now offer customized products and services that meet the unique needs of each customer. For example, some banks are now using data analytics to offer personalized investment advice based on their customers' financial goals and risk tolerance. In addition to personalized services, digital banking also offers greater convenience and accessibility. Customers can now perform a wide range of transactions online, including opening new accounts, applying for loans, and making payments. This has led to a significant reduction in the need for physical branches, with many banks now offering online-only services. However, the rise of digital banking also presents some challenges for banks. One of the biggest challenges is the need to ensure the security of online transactions. As more and more transactions are conducted online, banks are facing an increasing threat from cybercriminals. To address this challenge, banks are investing heavily in cybersecurity measures, such as two-factor authentication and biometric identification. In the next segment, we will explore the second trend that is shaping the future of banking, the impact of artificial intelligence. In this segment, we will explore the second trend that is shaping the future of banking, the impact of artificial intelligence. With the help of AI, banks can now analyze vast amounts of data to gain insights into customer behavior and preferences. This allows them to offer personalized services and products that meet the unique needs of each customer. One of the key applications of AI in banking is in customer service. With the help of chatbots and virtual assistants, banks can now offer 24/7 customer support to their customers. These virtual assistants can answer common questions, provide account information, and even help customers complete transactions. Another application of AI in banking is in fraud detection and prevention. By analyzing patterns in customer behavior, AI algorithms can identify potential instances of fraud and alert banks to take action. This has led to a significant reduction in the incidence of fraud, saving banks and their customers millions of dollars each year. AI is also being used to improve the accuracy of credit scoring. By analyzing a wide range of data points, including social media activity and online shopping behavior, AI algorithms can provide a more accurate assessment of a customer's creditworthiness. This allows banks to offer loans and other financial products to a wider range of customers, including those who may have been previously excluded due to a lack of credit history. However, the use of AI in banking also raises some concerns around privacy and data security. Banks must ensure that they are collecting and using customer data in a responsible and ethical manner, and that they are transparent about how this data is being used. In the next segment, we will explore the third trend that is shaping the future of banking, the growing importance of cybersecurity. In this segment, we will explore the third trend that is shaping the future of banking, the growing importance of cybersecurity. As more and more transactions are conducted online, banks are facing an increasing threat from cybercriminals. To protect their customers' data and prevent fraud, banks are investing heavily in cybersecurity measures. One of the key cybersecurity challenges facing banks is the increasing sophistication of cyber attacks. Cybercriminals are using a wide range of tactics, including phishing scams, malware attacks, and ransomware, to gain access to sensitive customer data. Banks must stay ahead of these threats by investing in advanced cybersecurity technologies and training their employees to recognize and respond to potential threats. Another challenge facing banks is the need to comply with increasingly strict data privacy regulations. In many countries, banks are required to comply with regulations such as the General Data Protection Regulation (GDPR) and the California Consumer Privacy Act (CCPA). These regulations require banks to implement strict data protection measures and to be transparent about how customer data is being used. To address these challenges, banks are investing heavily in cybersecurity technologies such as biometric authentication, encryption, and machine learning. They are also partnering with cybersecurity firms to stay ahead of emerging threats and to develop new technologies to protect their customers' data. However, cybersecurity is not just a technology issue. It is also a cultural issue. Banks must create a culture of cybersecurity awareness among their employees and customers, and they must ensure that cybersecurity is a top priority at all levels of the organization. In the next segment, we will explore the fourth trend that is shaping the future of banking, the rise of fintech startups. In this final segment, we will explore the fourth trend that is shaping the future of banking, the rise of fintech startups. Fintech startups are disrupting the traditional banking industry by offering innovative products and services that are faster, cheaper, and more convenient than traditional banking services. One of the key advantages of fintech startups is their ability to leverage technology to offer personalized services and products. For example, some fintech startups are using AI algorithms to offer personalized investment advice, while others are using blockchain technology to facilitate faster and more secure transactions. Another advantage of fintech startups is their ability to operate with lower overhead costs than traditional banks. This allows them to offer lower fees and better interest rates to their customers. As a result, many consumers are turning to fintech startups for their banking needs. However, fintech startups also face some challenges. One of the biggest challenges is the need to comply with regulations and to establish trust with customers. Banks have a long history of trust and stability, and it can be difficult for fintech startups to establish the same level of trust with customers. To address these challenges, many fintech startups are partnering with traditional banks to offer their services to a wider range of customers. This allows them to leverage the trust and stability of traditional banks while still offering innovative products and services. In conclusion, the future of banking is being shaped by a wide range of trends and factors, including the rise of digital banking, the impact of artificial intelligence, the growing importance of cybersecurity, and the rise of fintech startups. Banks that are able to adapt to these trends and embrace new technologies will be well positioned to succeed in the years ahead.